I think the credence comes from the idea that we've essentially had record low interest rates since, if you're honest, since the dot-com bust. I mean, it's gone up, then went right back down in 2008.
Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Well, hey, Jarred, great to see you this fine afternoon.
Thank you. It's great to be here.
Absolutely. And you're tuning in from Atlanta, is that correct?
I am. Yep. What they call OTP. We're outside the perimeter, the suburban part of Atlanta. That's outside of 285. There in this town, there's kind of in the social strata, you're either ITP or OTP. ITP being the new urbanites in the city, and then the rest of us yokels out in the hinterlands.
Well, it's such a big city too that it's just unbelievable, and especially the expanse of it is quite impressive. I've had a chance to go to Atlanta. I've been to the airport many times, but I feel like most people have at this point in their life, I'm sure. But
yeah, world's busiest airport. We fight for that title every year with Chicago.
Oh yeah, no, Chicago, and I mean LAX is obviously up there as well, and
and Hong Kong I think is the other one that always seems to nip at our heels.
Oh yeah, no. I mean, it's definitely one of the top airports in the world, and I've been through many times going in and out of the country, and so there's obviously much more that Atlanta has to offer as well, and I'm looking forward to diving in a little bit on the news in Atlanta and other things related to the metro area. But before we dive into the actual meat of the content, I'd love to get a feel for you as a person. What we typically do is we like to ask people if they could share a little bit of background on who they are, then that's typically provide some context for the rest of the interview.
Sure. I think like most reporters, I'm a frustrated wanting to have been something else my whole life, but ended up here and found my real niche in commercial real estate. So I've been in the newspaper industry since college graduation. Started as a cops reporter like a lot of us do. And then back in going back memory now, 99, got an offer to go to this paper, as next step up from a paper called Macon Telegraph. And the only thing they had open at the time was business. And I really hadn't thought about business reporting. Honestly, I wanted to be a political reporter, and I just figured, well, let me go to this next step and wait for an opening and go from there. Ended up falling in love with the beat. Then I got recruited out of that paper to go to a publication called Atlanta Business Chronicle, to become what started as a retail real estate reporter, ended up becoming the commercial real estate reporter for the paper, and the rest is history. I've just focused on this industry since, and honestly, you could probably agree with this, or you may disagree with this, but to me, what's fascinating about commercial real estate, it's not just the square feet, the buildings. It's a window into larger issues, both economic, social. I mean, we are talking in this pandemic, we had this robust conversation of hybrid work and getting back to work. I mean, the basis of it has to do with real estate, but here we are in a larger context, talking about it in a societal way and in how it affects us every day. So this is why I fell in love with commercial real estate, because it's just so nuanced.
Absolutely. No. And that's one of the reasons that attracted me to commercial real estate versus residential. I actually come from an engineering background. I was in software development and consulting for many years before I got into brokerage. And, the reason why I was mostly attracted to the commercial real estate side is because of the nuances. There's just so many different webs of different things to consider. And it really is it's a unique industry for that reason. And I mean, an interesting point is you mentioned you'd gotten to the business journaling side of things. Was it just that another opportunity opened up in the commercial real estate, right? No, vertical?
So, yeah.
How did that work?
So when I started in the real estate side, it was just focused on retail real estate. At the Atlanta Business Chronicle at the time, there was the retail real estate reporter and then the general commercial real estate reporter, which was the more senior level. So after my predecessor left, I got moved up into commercial real estate, and as I said, kind of stayed there since with various publications.
Absolutely. So when you talk about commercial real estate, obviously there's various different types of
Yes.
property types. There's different facets within the industry and services within the industry itself as well. So do you have a particular specialization, or are you focused on kind of the broader outlook based on different, trends that
Well,
are happening in the marketplace?
a little of both. Obviously, I look at it from an overview of things, but we focus on the main food groups: office, industrial, multifamily, retail, and even getting into some of the niche stuff like storage. I even did an article recently, which is well read about the popularity now of people leasing their sites for outdoor trailer storage, just to hunker down truck beds for a while. So we'll touch on it in all those different facets.
That's awesome. Yeah. And that's happening locally here. I've got several clients. I'm looking for just truck parking and truck storage. I mean, it's unbelievable. And Louisville is, has a pretty strong industrial backbone. We're kind of somewhat of a logistics hub, maybe not to the scale of some of these other larger metro areas, but we do have a huge demand for those types of uses in the area. So it's kind of interesting to hear you say that.
Well, and we're talking about how our industry can bleed into the everyday world and social issues. I didn't write this story, unfortunately, because I think it's fascinating, but I was reading a story, I forget what publication had it, talking about how truck drivers are having more face-offs against their HOAs because these guys are making good money, so they're moving up in classes and they're moving in the neighborhoods that may have HOAs, and the HOAs are fighting about parking their trucks in the neighborhood. So they're having to find, commercial parking spots to store their trucks or idling. It's fascinating how all this just ripples through everything we do.
Absolutely. So you are originally, are you an Atlanta native? Is that correct?
Yeah. For by and large, I'm a lifer. I live in a house with my wife. We bought when we got married, which is a quarter mile from where I grew up. Only times I went to University of Georgia for school, graduated the J school there. As I said, I spent 1 year in Macon before coming back to Atlanta. I know. You can't get out of me.
Absolutely. No. And the reason I asked that is because, you've probably seen the evolution of Atlanta since you've grown up. And so, one of my questions really has been, what are some of the, what does the evolution look like, ever since you were a child? And even now that you're in the commercial real estate industry, how has that evolution, evolved? What has evolved over the period of time that you've been in the business? And maybe what are some of the initiatives that you think that you could point to that said, that's probably one of the reasons why we've had such sizable growth? And obviously, Atlanta is one of the hot areas where a lot of people are moving to. And obviously Florida falls in line with that. Texas, I went to Arizona State. So in Phoenix, that's a big market where people are moving to as well. But, if you could kind of touch on maybe, the evolution of the Atlanta market, and then maybe if you could touch on a few things that you think are probably some of the reasons why that's the case.
Sure. Well, I can go to a little bit of my history book and talk about, let's talk about Atlanta starting in the 60s, a little bit before I was born, clearly. But, that was when Atlanta first started becoming this hub of the South. And with that in mind, you started to see this dynamic where downtown Atlanta just started to grow for the first time. Companies were coming in. By the 70s, to early 80s, you began to see a new trend. Remember, Atlanta had become the poster child over the last 30, 40 years for sprawl. You talk about how big Atlanta is. When someone says they're from Atlanta, that's kind of a catch-all, because you could be a couple 100 miles potentially apart from where you're talking about from the city, but you're still considered Atlanta in a way. But the sprawl started around late 70s, and then to the 80s, where companies were beginning, instead of leaving the core, the city core, and going to the suburbs. So you had this booming office market in places called Central Perimeter, in Gwinnett, in even Buckhead, which is it's right outside the city. It's north of the city, and it is part of the city. That became a burgeoning office market in of itself. And that continued. Really, you saw this suburbanization of Atlanta's corporate community. And with that, of course, came the congestion and the sprawl and, neighborhoods popping up all over the place. An interesting thing happened about within the past 10 to 12 years, and accelerated a little bit just before the pandemic, where we had this re-urbanization taking shape in Atlanta. Companies came flocking back, particularly the heart of it is in Midtown Atlanta. You have companies coming back to Midtown Atlanta, people moving in. And so you've seen this resurgence of the city core again, which has been exciting. And that's kind of where we are now. We're at this inflection point where the pandemic really did things funky. You have the millennials fueled this re-urbanization movement in Atlanta, and as in they did in many cities throughout the country. But they're now, a lot of their the older levels of the older portion of the millennials are getting to that point where they're finally starting to form households, they're having families. How feasible is it to still live in a 800 square foot condo in the city when you have kids? All of a sudden you're starting to see this push to come back out to the suburbs again. And that has its own issues and frustrations we're seeing with development in regards to that movement again.
Yeah, for sure. And from a development standpoint, you kind of alluded to it. I mean, how is Atlanta relatively friendly as far as, pursuing these development initiatives? Because I know here in Louisville, we've had some issues in the past where it's, like not in my backyard type of, pushback from the local community. And,
I think
sometimes
all the Southeast is very similar to that. So you've got a very overall lax governmental rubber stamping essentially on development, historically in Atlanta particularly. That's why we had so much sprawl. And it's been pretty liberal in terms of allowing different types of developments throughout the area. But you also have, and it has grown stronger, I would say in the last 20 to 30 years, the NIMBYism portion of this now. And that is when you talk about, I think you've seen it particularly with, you saw the explosion of industrial. You saw a lot of kickback against not a warehouse in my backyard. Clearly multifamily apartments have been an issue, particularly if you're talking about workforce housing. That's still a general NIMBYism protest point. So yeah, but that seems to be like kind of a character of the Southeast.
Yeah, it may very well be the case. I mean, and I would say just from our end in our rezoning process locally, it's very cumbersome and takes a long time, and there's a lot of hoops to jump through. And so there's already these barriers to getting to where you need to go as far as getting a development or a parcel ready to where you can develop it. But then there also is, depending on what part of town you're in, could be pushback, like you said, the NIMBYism, depending on what the development is. And, there's even some developments that I've seen here locally where I'm just shocked by the fact that they wouldn't want something like that in the area. And, I can understand, having, a manufacturing facility down the street from a residential community. I can definitely understand that. But something like a Topgolf, we had issues with getting a Topgolf in a relatively affluent area within town because they were saying that the lights would affect, their,
Yeah,
it's just like, it's just
the things that people complain about. But and I don't. The other thing too I've seen is, and you hear this a lot from the development community, is that the permitting process has just gotten more complicated and more expensive, which you're not the average person isn't seeing that unless you're in the industry. You don't really see that, but that is holding back also developments and making things more expensive. I mean, we talk about cost of living in terms of apartment rents and how apartments are going up. One of the things that developers always say is, well, look what it takes to cost me to even get this thing approved. I've got to be able to, get my money back for all that cost. It's going to come out in the rents.
Yeah, absolutely. No, I couldn't agree more. And on the business side, obviously I'm on the brokerage end. And so, getting understand or explaining to clients sometimes about why the rates are where they're at, in particular, when you're talking about like retail space, some of the newer developments that are coming up. I mean, they're getting record rates as far as rents are concerned. And so, showcasing this to clients, and they're like, how can they expect us to pay that? And I'm like, well, there's also the other side of the coin from the development end, especially developing this all the way through COVID. You've had, issues as far as supply chain is concerned, cost run-ups in a variety of different areas. And so, you got to recoup that in some capacity. And, the supply of space in the area is limited. So therefore they can push rents a lot more than they could maybe just a few years ago. So you're right. It's all down line. Everything starts in development and then everything comes down line. And so it's always interesting to hear how it's going on in different parts of the country. So one of the things that I was interested in hearing your take on is, obviously some of the more impactful developments often take place with public-private partnerships,
Mhm.
especially in situations where, if someone was a private entity that wanted to take on this project, just wouldn't be economically feasible without some form of public involvement. And so I'm kind of curious to hear your take on some of the initiatives you've seen in the past, maybe in Atlanta, that you've seen be very successful, and some of the lessons learned from those projects.
Yeah, it's interesting because there's not a catch-all situation that describes, that's kind of like an umbrella to describe all of them. They're all very unique and politically charged in their own ways. You have, make no mistake about it, Fulton County and the city of Atlanta, and we'll talk about them mainly because they are the county and the city of the kind of the hub of development activity over the last 10 years. Have been very generous in their handouts to, either tax breaks, bonds to incentivize development and whatnot. And, those come with their own hair. I can't speak to the, if it's been successful or not overall. I think you will find that you have your critics who say that we shouldn't be giving developers, for a market rate apartment property, they can get the rents just fine. Why do we need to give them a tax break for 10 years? Then you have, like we talked about a little earlier, you have the developer saying, well, look at my costs going into this. I can't even make this pencil out if I don't at least get some help on the back end on that. I think some of your biggest, or biggest would be the wrong word I would use. I said the most high profile incentivized projects in Atlanta would be, of course, the Battery at Truist Park and all the story around that, with the Braves leaving downtown Atlanta, going to Cobb County. The allegations of backroom dealing and not allowing the public to input onto it. Despite all that initial controversy, the project today is viewed as extremely successful and has really created this robust market around the battery, where properties are marketing themselves. Hey, we have views of the battery, or walk to the battery, and are getting premiums for that. The other one that I think remains to be seen, but I think is encouraging because they are moving forward, and it is a reputable developer, would be CIM Group's efforts to change what's called the Gulch in downtown Atlanta, which is the sea of asphalt and parking next to the Mercedes-Benz Stadium, that they're turning into essentially a big mixed-use district. And that that seems to have sparked this interest in the redevelopment of downtown overall, where you have another company going in and buying some of the historic buildings south downtown, redeveloping them. And now with Georgia State having grown so much and now keeping students there. Used to be Georgia State was very much a commuter school. I mean, the kids that went to that school generally lived in the suburbs and just drove every day to go to school there. That's changed. They're living out there now. There's dorms. That has created this culture where they're all hanging out there, and that was that 24-hour population you need to get things rolling. So I would say those two remains to be seen how those do, or how the Gulch does, and Newport, which is doing some of the south downtown stuff. But it's been years of talking and no action, and now we're finally seeing the action. So again,
awesome.
While there might be public incentives involved, Gulch being, I think, the biggest single incentive package ever offered into a development for Atlanta, city of Atlanta. There seems to be some good coming out of it. Then you have the other side, where the state had given an electric car manufacturer named Rivian a bunch of incentives to do a new factory out in the suburbs that is being fought tooth and nail by the local residents. And certain issues with a bill just passed now complicate whether even Rivian can get those incentives. So there seems to be, that's the other side of the coin.
Yeah, for sure. And so you alluded to a few, types of projects, obviously higher institutions, having those projects stem outside of or surrounding those higher institutions, sports stadiums. We had several projects over the years. Obviously we have not an MLS soccer team, but the second tier soccer team. They used to play at the Louisville Stadium, and ultimately they built a brand new stadium for them. And there's starting to be some development around that area. And that's kind of, with that big development, you start seeing more investors coming into that area and bringing in different types of concepts. We had a lot of incentives similar to you. We have a big Ford factory, the battery plant, which is going to be built in just south of here in Louisville. It's near Elizabethtown. It's a small town called Glendale. It's about $5 billion incentive package for Ford to come down there. They're going to bring 5,000 jobs. So, those types of private public incentive packages that you can create to incentivize business to move to an area, I mean, it could be very beneficial. And, obviously there's people who are going to be against certain things because, there may be a situation where you think, oh, why are they, they're going to be making money off this opportunity, and these are taxpayer dollars. But then on the flip side, it says, well, what type of tax revenue could these projects potentially generate? So it's one of those things where it's kind of interesting to discuss. And, I'm a big proponent of trying to make things work, especially in areas that currently have not been addressed. There's parts of cities all across the country. It's not just Atlanta or Louisville or wherever. It's that have historically just been somewhat blighted. And I feel like in those areas, you almost need to have that Kickstarter type of project to really, incentivize growth in that area. So,
well, and there's always encountered this question when I do these stories. So we have this part of Midtown Atlanta called West Midtown, Upper West Midtown, that has boomed. And a lot of it was on OZ land. Like, it was a lot of opportunities.
Yeah, opportunities on there.
But the question is the chicken or the egg? Did it boom because it was an OZ, or is it booming and that just happens to be an OZ? And I think the latter is more true. It's this desire to be there. So incentives only have so much sway. There has to be a sense of wanting to be there for some reason or another to begin with.
Mm-hmm.
And that has to come with some fundamental shift maybe within that market. In the case of West Atlanta, it was more and more affluent people moving out there, buying some of the older homes and renovating them. You had this intelligentsia that liked the area of Atlanta that was going out there. It's right by Georgia Tech. Georgia Tech's become the big nexus now where a lot of development wants to be around. Particularly companies want to be around Georgia Tech to attract the talent coming out of that. So again, incentives will only do so much.
Absolutely. No, you're right. And it's more of a macro shift in some capacity to kind of incentivize that from happening as well. So you're right. I think there definitely is a blend of the two that probably is what's causing these types of shifts in the local market. So one thing I'm kind of curious about, and we had talked about, a little bit offline, and just even touched on it here, is the hybrid work environment. Just for those of you guys who know, we're recording this, near the tail end of 2022. So we've been, coming out of a COVID environment, and if I hope now we're kind of past that at this point, but you never know. I feel like the impacts or the effects of COVID will be felt as far as the way we work for many years to come. And I'm kind of curious to hear your take on it and what you've seen, and maybe obviously talk with different owners and business owners and building owners, and trying to get a feel for what you think the future of hybrid work looks like going forward.
My views of how the long-term ramifications have evolved as well. I really thought that when we first started talking about it, we were in the height of the pandemic. Most people were staying home. That as soon as you get the all clear, everybody's just going to just go back to the office. They may not necessarily want to, but the companies are going to go on. We got to go back to the old days. Come in. The longevity of what I have seen has been, it's been stunning to me. And I mean, it's created this whole shift in the way we view work and the necessity of being in person in something. I see it very generational. In one case, I think you still have a lot of, leaders in their 50s or later who, grew up at a time in the office market where you came to the office. That's where everything was done. Hard to get their head to wrap around that productivity could still be had if your workers are only coming in twice a week. But then you have the younger side that's showing the results, that's showing the data is saying we're actually, in some cases, we're more productive working in a hybrid situation or even fully at home during the pandemic, than when we were coming in. On top of that, you've had this has come at a time where companies have been extremely sensitive, and I say they've been extremely sensitive for the last 10 years on the war for talent. So you have, and that has led to companies literally picking and designing office spaces in ways that hopefully, to them this will most be appealing to not only hiring and luring new workers, but once we get them wanting to stay with us. But we're now at this another inflection point. And I had kept asking us, and I've been asking you for the past 5 years, is like, will this movement of basically big employers catering to an extent to their employee base last in a recession? And we're going to be testing that, I think, pretty soon now, where it could be, and you're already starting to hear the unstated threat of you either show up or you're probably not going to have a job, if you're expendable. So it'll be interesting to see. I can tell you that right now, hybrid work particularly in Atlanta, has taken a bite out of the leasing market. It's not shown up quite in the data yet, because obviously the lease, absorption data is backward looking, but I think you're going to start to see a massive slowdown in absorption, because a lot of the companies, as they come up to term, aren't taking the same amount of space. They're downsized, and there's most time they're saying it's because we've shifted to a hybrid work model. Mm-hmm. And I take that and multiply it all the cities across the country. That's a lot of potential office space that's going to get dumped onto the market.
Yeah, no, for sure. And there's going to be need to repurpose space. I know here in Louisville, we've been kind of having issues for many years regarding our downtown office market, and COVID kind of just, accelerated the deterioration on that front. I know that, there's definitely office buildings downtown that are, 60% occupied, where it's like, at a certain point, there has to be new thought on how we can repurpose these office buildings to serve other purpose. Obviously, from a retail perspective, ground floor space is typically more desirable, but in a multi-story office building, repurposing those into condos or some sort of apartments obviously seems the most logical place to go. But obviously that like we had mentioned before, it requires the thought process of living downtown to be more of a thing. Here in Louisville, it's not that prevalent. I know in Atlanta, it's a lot more prevalent to see people downtown. Louisville's not one of those cities. I know Phoenix, many years ago when I was living there, downtown Phoenix was somewhat of a commuter type place. I mean, no one really lived downtown. They either live in Tempe or Scottsdale or some of these other surrounding communities. And now it's become a lot more vibrant as far as the downtown's concerned. And obviously that's city specific and maybe different across the country, but each community and each city is going to have its own unique, difficulties when it comes to some of these shifts that happen in the landscape for commercial real estate.
Yeah. And when you look at, not in specific to Louisville per se, but when you look at the pipeline of activity that's in the market, are you seeing companies seeking less or more space, about the same?
So the larger companies are starting to downsize, and even in our downtown office market's unique in that we have some big employers that take up a good swath of the office space. So Humana has several buildings downtown. Humana is probably one of our biggest employers in the city. Yum Brands is another big employer, so they have a pretty big presence downtown as well. We had Papa John's. That was one of our
thank you for
you guys. I know you guys came down, and that kind of hurt a little bit for us.
Speaking of Truist Park, yeah, that's right.
Exactly. Yeah. So there's certain things. There's definitely been certain shift as far as the smaller scale office market. Our East End has been historically the more affluent part of the city, and that office market, especially for mid-size and smaller office, is just very, very competitive right now. And that's more so for the small accounting firm, the small law firm, or just 1 to 2 employee type of businesses that just want to buy a condo or they want to lease 2,000-3,000 square feet of space. That's very tight right now. It's very hard to find. But as far as go ahead.
Oh, go on.
No, that was it. I mean, as far as the larger, complete floor plate downtown, where you're talking 15 to 20,000 square feet of office, it's not doing very well, especially in downtown. So
the other undercurrent I'm beginning to hear in the office market is there's been kind of a pushback by employees on the whole. Companies try to just jam as many workers into as tight amount of space as they can, and that created like hot desks and just sit around at a long table and work. Obviously the pandemic caused some of that concern, are we cramming too many people close together given the kind of health environment but I think that fear has relatively abated, and I think it's now just becoming down to I'm hearing brokers say and telling companies telling them, yeah, our employees kind of want personal offices again. It's hard to focus or not be distracted if everybody's working at one giant table. So I think you're going to see a reversal of the trend to an extent. How that spells out in terms of net leasing activity, remains to be seen. I still think it's going to go down, but it may buffer some of the shrinkage we've been seeing.
Yeah, and maybe that's a good point. And I don't really know how that's going to affect it long term, because if you need more private office space, obviously your footprint's going to enlarge. But if, let's say you have a 500 person company and maybe only 200 are in the space at any given time, but the previous footprint was 50 square foot per employee, and now it jumps up to 200, the net effect of the drop off may not be as significant. So like you said, I think there will be, we'll know in time, but it's interesting to speculate. Obviously with retail, I mean, the footprint continues to shrink, but
without question.
Yeah, but it's amazing too. I mean, if you're talking about some of these QSRs, I mean, I work a lot with franchises, and so I have some clients that operate like smoothie shops and other types of different retail concepts, and their price per square foot is still very strong. I mean, they're able to pay a significant amount because their sales are able to justify that. But you're with the shrinking footprint now, the price per square foot that they could pay typically increases as well. So
yeah, if I think for retail, the fact that we had viewed retail as, at least in Atlanta, as having been overbuilt for years, cut that pipeline of new construction down. So the stuff that was built was in mixed use settings, very popular. We're able to command strong rents. And that allowed the existing space to push up rents too. So you're starting to, it's almost like this strange renaissance that you kind of least expect take place in retail is taking place in retail.
Yeah, no, for sure. And I mean, we're seeing it here a lot too with, especially, experiential and service-based retail. I do a lot in the shopping center space as well, small to mid-size shopping centers. And I got a lot of clients that they love buying those as investment opportunities, and they're very, very strong performers. And they've done well, even during COVID. So it's very interesting to see. So, as we record this, as we kind of alluded to, it's near the tail end of 2022. We've been historically in a very low interest rate environment, but over the last 6 or 7 months, we've seen a steep uptick in interest rates across the board, mainly to combat inflation. I mean, we've seen some pretty disturbing numbers over the last several reports regarding the year-over-year inflation numbers. So I know the Fed is doing what they can to make sure that we quell that. So what are some of the things that you think are going to what is the impact of these decisions going forward, let's say 1 to 2 years, and how do you think it's going to play out?
So let me preface this by saying I'm not going to get political on anything, whether I've heard arguments the Fed waited too long to do this, and I think there's some credence to that argument. I think the credence comes from the idea that we've essentially had record low interest rates since, if you're honest, since the dot-com bust. I mean, it's gone up, then went right back down in 2008. And instead of interest rates having been viewed as a way to facilitate deals, to getting over the fear of the economy, you have deals built, a generation of deals executed under the auspice that it only makes sense because interest rates are low, and probably the expectation was they were going to stay low for a long time. I think that's maybe kind of where things got a little dangerous. But I'm not saying the Fed's right or wrong. I'm just saying I think that's what it's led to. No, the interest rates are going to prove to be a very, very prescient situation for commercial real estate. It's clearly affected our residential brethren very quickly. You look at the housing market here in Atlanta, and we've gone from a market where homeowners were getting bidding wars if they were putting their house up for sale from buyers. You know, you hear stories about people writing letters pleading for please choose me, to now regularly seeing price cuts on the asking price now. I know we'll see how far that goes down. I think we had a situation in Atlanta I had written about where the escalating cost of single family housing was going so high that it was cutting the entry level buyers out of the market, which kind of is the seed for a propagating economy and a propagating for a city or for a metro region that's going to continue to grow. You want to be able to provide housing for your youngest generations. They were getting priced out of it. That led to the big SFR boom we've seen, and VTR, where instead, okay, we'll get big money to come in and buy the houses and rent them to people. Interest rates are all going to play, are going to tinker with that dynamic. It's definitely putting the housing prices down. Now, how it's affecting real estate, it's a little more new. I don't know. There's a lot more nuance to that. I don't see, even though we were seeing record pricing, record low cap rates in industrial and multifamily, I thought, what we've seen in interest rates would immediately start seeing price drops, but it not necessarily. It hasn't really affected you. Today, David Rubenstein's has a fund that just came out, 250 million, targeting industrial and multifamily. Office, I think it's affected office a lot more quickly than other product types. I don't think it's done much to retail either at this point, particularly if it's well-placed retail. One of this, and I don't have an answer to this, but I find there's going to be an interesting psychology to this, is that we've had rates low for so long. There are people in decision-making roles with investors and real estate companies, 10 years my junior, maybe 15 years my junior, who have never been in an environment where rates have ever been over 5%. If we get to rates getting 6, 7, 8, I don't know if they'll go that high, but let's say they do, are they psychologically prepared to invest in a market like that? How do they make the numbers work anymore?
Yeah. And I think the bigger question really is like you said, the pro formas, the expectations that people had that invested just 4 or 5 years ago, because these loans are going to mature at some point. And, how is that going to impact their ability to refinance or sell in an environment where it may not have, the liquidity may not be there, or not necessarily the liquidity, but, the return expectations just aren't going to be in line with what they had projected to begin with. So that's my main concern. I'm interested to see how that plays out, because especially recently, I mean, obviously you've got the larger players that have been operating in the space for many, many years, but you also have now where, the syndication models have become a lot more popular, where there's a small group of people who get together, they raise some capital, start buying up these properties. And especially in the multifamily space, it's become a very, very, it's been a growing trend for at least 5 to 10 years. I mean, it's been impressive to see. And so,
what are their hold times typically?
3 to 5 years. And usually those loans mature 5 years down the line, or 7 max, 5 to 7 is really what you're looking at. So, what does that look like? I mean, if the loan comes due, and, right now, I think obviously banks are in much better shape than they were in 2008. So maybe there's a way they could work with the lender or the person who owns the property. But, it just is one of those question marks that I don't know if it's going to, play out to the best for those involved in that transaction.
I agree. I would, I think you're beginning to hear this in the CMBS market with a lot of refis coming, and the wave of refis coming. You're going to see a lot of distress now. There's some concern there, but it seems like for the last 10 years, when investors have expected distress, particularly those that are setting up funds to make, jump at an opportunity, it hasn't appeared. I mean, we are all thinking, oh, this is going to be terrible. The pandemic was going to just decimate retail real estate, and there's going to be bottom feeders everywhere. That didn't really ever happen.
No.
Multifamily, because the federal government's intervention, still that didn't happen either. In fact, prices kept going up. So you expect one thing and something different happens. We'll see. I agree. I think the refinancing thing is going to be an issue, but I was even thinking like you're going to start to see real struggle with people who had construction loans.
Yeah.
Having to get permanent debt, and you are hearing a little bit of that. And when the Fed first made its moves, there was a lot of chill in the market that postponed and even outright killed some transactions because the cost wasn't making sense anymore. But
absolutely. Yeah, and we'll see. I mean, there's a gentleman in my office. He's one of our agents, and he does a ton of land deals, and he's obviously has his finger on the pulse of everything going on here locally and in the region. And some of these larger home developers, that had swaths of land under contract, a lot of them have just let the contracts either lapse or, got out of these contracts because they are still kind of hesitant about what the future is holding. So obviously that's a macro trend, and he's been following their activity for quite some time. And on the local level, I've had deals fall apart because of it as well. So it's not, so I don't know. I mean, it does make a difference. It makes a big difference in our ability to execute on transactions, but that doesn't necessarily mean that, we're going to go through a 2008 situation. I definitely don't think that's the case.
Yeah. I think you said earlier, the banks are in much better shape than they have before. I think there was some concern with the problems that Credit Suisse is facing right now.
Yeah.
Is that your Lehman moment for this decade? We don't know. Doesn't seem to have the same effect that Lehman had back in 2008, certainly. So I don't know if we're able to shrug that off, but I do think that interest rates are going to be a larger factor. The question is, how sticky are they going to be? If we enter a severe recession, how quickly will the Fed backtrack?
Absolutely. No, for sure. Yeah, no, I think that's some great insight for sure. So one of the things that we like to ask our guests is that we're all voracious readers. I mean, I love to read, and also, I'm a big Audible guy as well. So one of the things we like to ask our guests near the end of the interview is, what is the most impactful book you've ever read? And it doesn't necessarily have to be real estate related.
Yeah.
We had people provide a variety of different books, but we always like to ask this question because we always get some great answers.
Yeah, I have. I want to sound cliche. If you talk about the most interesting real estate fiction book I ever read and enjoyed, was probably Man in Full. Because if any of you grew up in Atlanta, that Thomas Wolfe based his characters off some real developers here in Atlanta, and it was fun trying to guess, all right, who is this or who is that. Just general book. I'm a huge Stephen King fan. The Stand is still one of my all-time favorite novels of all time. I reread it literally every other year, the uncut edition. So we have that. I read a lot, but I'm trying to think of any just books that have blew me away recently. And I haven't really encountered any, unfortunately, to talk about.
Oh, yeah. Have you read Stephen King's On Writing? That's one of my favorite books of all time.
It was a great book. Yeah, it was like a masterclass in writing. Yeah,
absolutely. And even his story, the way he described how he depicted his life. I mean, it's just so impressive. This man is unbelievable writer, and I think part of it is his regimen. I mean, the guy writes 2,000 to 3,000 words a day, every single day. No, without any avail, and I'm sure there's editing involved in there as well. So he's just a master of his craft, and he's been doing it for so long. I mean, it's unbelievable. I mean, I always recommend On Writing to everyone I talk to, because it's one of my favorite books of all time.
Good. Okay. Very good. I'm glad. I'm not bringing a writer who's aliens into this audience. Good. I'm glad.
No. I mean, no one's recommended him, but I'm glad you brought up Stephen King, because obviously his horror books are obviously world renowned, and that's what he's famous for. But the book that was super impactful to me was his book on writing, and I just always recommend it to people, and everyone's like, oh, okay, like it's kind of just it's off, not necessarily off the beaten path, but it's not the book that most people affiliate with Stephen King. So.
Yeah, that's true. I'll tell you my favorite nonfiction book, and one of my favorite business writers is Matt. Matt, I'm gonna probably tear up his last name, but it's Taibbi, I believe, Taibbi.
Mhm.
He wrote a book called Griftopia, which was really an insider's account on 2008. It is a massively just an incredible book, detailed. Now Matt's got a viewpoint. He's a writer for Rolling Stone magazine, so clearly he's going to interject his opinions and stuff and there. But I mean, he was on the money with just how the industry just basically stole the economy from the general population and the way it was doing with the housing market and mortgages.
Absolutely. Yeah, I know. I'm interested to read that one, so I'll look it up afterwards. That's actually one that I would probably find interesting. And like I said, I get the Audible credits, so I get like 2 Audible credits a month, and so I'm always listening to something.
Yeah, we're a Spotify family here, so
okay.
Podcasts, and now they're getting into books too.
That's awesome. That's awesome. Well, we're honored to have you, man. Really, Jarred. It's been a great conversation. One thing we typically do at the end of the podcast episode is we like to ask our guests to contribute something to what we call the commercial real estate treasure chest. It's a repository of resources that we usually make available to our audience. And we've had guests contribute helpful PDFs, spreadsheets, articles, you name it, really anything they think would be of value to the audience. So I wanted to give you an opportunity to share what you're willing to contribute today.
Well, I don't want to, necessarily blow our own horn, but I'll link to our Bisnow website where you can read our up-to-date commercial real estate news, not just in Atlanta, but across the globe. I mean, we're also in England and Scotland, and that'd be the one thing. And a lot of the information I get that I find interesting and golden is not generated by me. Mm-hmm. It's I'm getting it from groups like Cushman & Wakefield or CBRE, and people who have a much better grasp on the data or access to data than I do. So that would be my best resource I can give you, is just, hey, look out for what we're writing next.
Absolutely. No, and I'm going to be following along myself, and I'm looking forward to being able to offer that to the audience. So if you guys are listening to this, definitely check out the repository, because you guys are going to gain some value from it. So again, Jarred, thank you so much for your time. We greatly appreciate it. If you guys
it's been a pleasure. Thank you for asking me on, man. It's flattering.
Oh, no, absolutely. No, I'm glad we were able to touch on a variety of different topics pertaining to commercial real estate. And, we got granular as far as Atlanta market is concerned, but given the size and the breadth of the Atlanta market, there's a lot of macro things we could pull out of our discussion as well. And we did talk about
we left a lot of things we could have talked about on the table just for time's sake. You have the migration patterns, how that's all affecting real estate. I mean, logistics, the supply chain issues.
I mean, we could talk all day.
Amazon's decision to pull back. I mean, it's just like,
taking back, like you said, deciding to sublease a significant amount of space. I mean, there's a 1 million square foot warehouse here that Amazon has not moved into, and they're just paying rent.
Right, they're just paying rent on it, right?
Yeah,
which is unfathomable to me as just someone who's like kind of cost conscious. But hey, if you're Amazon, I guess no big deal.
Well, what's $1 million a month when you're talking about the operating cost of a warehouse, right? The facility probably costs $10-50 million a month to operate. So it's like, what's $1 million, or whatever it costs.
Right.
But no, we greatly appreciate your time. Really, it's been super insightful and impactful, and I know the audience is going to gain a lot of value from it. So for those of you guys who are listening to this podcast, first off, we greatly appreciate what you guys do as far as your support, and we would greatly appreciate if you could leave a 5-star review. It really makes a big impact on our ability to reach a broader audience. Along with that, if you guys are watching this on YouTube, we would greatly appreciate if you could like and subscribe to this channel. It really helps with the YouTube algorithm and ensures more and more people can hear this message and learn about the many facets of commercial real estate. So thanks so much for tuning in, and we'll see you all next time.